Hey everyone, my name is Wei. In this video, I will talk about tax deduction versus tax credit. Though some people use them interchangeably, they are actually very different. Let's start with the definition. Tax deduction essentially lowers taxable income, while tax credit lowers taxable liability dollar for dollar. Let's look at an example for tax deduction. Let's say Bill has $10,000 taxable income that falls under 24% tax bracket. With 0% deduction, he will owe $2,400 in tax, because that is 24% of $10,000. Now if Bill gets a tax deduction of $4,000, his taxable income becomes $6,000, because tax deduction lowers taxable income by definition. With $6,000 as the new taxable income, he will still owe $1,440 in tax, because 24% of $6,000 taxable income is $1,440. As you can see from tax owed before and after tax deduction, Bill saved $960 with $4,000 in deduction. Now let's use the same example, but instead of tax deduction, we use tax credit. Just like before, Bill's $10,000 taxable income that falls under 24% tax bracket with no tax credit will result in $2,400 in tax owed. Now let's say Bill gets a $4,000 tax credit. Since tax credit lowers tax liability dollar for dollar, we can subtract $4,000 from the $2,400 that Bill owes. This results in Bill getting $1,600 in tax return instead of owing tax. This is a $4,000 saving for Bill. As you can see, tax credit is much better than tax deduction because it reduces tax liability dollar for dollar. Here are some tax deductions and credits available for everyone. Businesses can deduct business expenses. Those expenses are the cost of products or raw material, storage, labor costs, or factory overheads. Businesses can also take advantage of tax credits. Some examples of tax credits are energy efficient appliance credit, plug-in electric drive motor vehicle credit, and research credit. Individuals can deduct work-related expenses, such as home office, business use of a car. Individuals can do standard deductions or itemized deductions. Depending on what the individual's situation is, individual may choose one over the other for better results. Education and healthcare expenses are deductible as well. For example, student loan, medical, and dental expenses. Investment-related deductions can result from home sales, individual retirement arrangements, or capital losses. Individuals can also take advantage of family and dependent credits, income and savings credits, homeowner credits, healthcare credits, and education credits. Next time you visit your accountant or tax preparer, ask if any of those tax credits applies to you and save some money. Keep in mind, if you do take tax deductions, be sure to keep the supporting documents for future reference. Hopefully you learned something from this video. Thank you for watching.